Okay. Okay, yeah. Around 622 today. Around 900 Canadian. You know, because Canadian dollars, we always go convert here, right? We know we get we get a little cheated on the exchange rate right now. So we look at the higher number, right? When the higher number is Canadian, we reference that, especially on YouTube. From our reels, you guys follow me on Instagram or anything, you'll see that I made a 600 US, but it was like 900 Canadian. So obviously, I'm not going to share the 600. We're going to say we made 900 today, right? Whatever gets us closer to that 1,000. So yeah, 504 right now. Just gonna give it a couple more minutes, let people trickle in. Ooh, what a day! What a day today. How many of y'all? How many of y'all were green? Yeah, see some thumbs up. That's good. That's what I like to see. A red trader. Oh, that's unfortunate. I'm sorry to hear that. But today was a really interesting day, and I think there's going to be some benefit today to kind of recap the day, talk about some of the trades that I took, talk about why I took them, and I know that we're just showcasing a lot of quant data. That's why we're here, though, right? We are trying to showcase how a different, sorry, not a data-driven approach can actually help you succeed, right? Have higher win rate, have a more probabilistic outcome for all the trades that you take. What is this, pesos now? Higher number. Oh my goodness. For those of you guys that are red, I really hope you guys are journaling, reflecting on the trades that you took and why you took them. Right? That's really important. And why you exited for red, right? I see a lot of you guys now have been participating via leverage shares. And I think that's great. I think leverage shares is something that a lot of people forget that you can take advantage of, right? When we talk about the totem pole of importance for trade structures or trade instruments, we were talking about options and futures. Leverage shares is actually the least risky in terms of buy side, right? Because those can't go to zero. Those can't go to zero. When you're trading something that's like, NVIDIA 150 calls, like what happens if you're wrong? All out of the money options goes to zero, right? That is the one truth about options. And so it doesn't matter what data you're looking at. If you're thinking bullish or bearish, there's different ways for you to participate. And so, yeah, I really like seeing you guys take advantage now of leverage shares. NVDX, NVDL, PLTU, right? We sold some of that for profit today. MSFL, that was a great trade today. TSLL as well. These are all tools. These are all, derivatives that we can use in the market. So, yeah, SPY-U, one of my favorites, right? So underlooked. Underlooked. I don't know what I'm saying. Overlooked. No one looks at SPY-U. And SPY-U, I'll say right now, a lot of brokerages in Canada, if you're trading SPY-U, it's free. There's no commission to trade them. Whereas you pay $3 to $4 to buy SPY calls. Right, immediately puts you in the hole. Okay, cool. So it's 5:07. I'm going to go ahead and get this started. As promised from last time, I will leave some room for at least 15 to 20 minutes for Q&A. Today I want to go through the rest of the week. So we have Thursday coming up with a lot of news. It's going to be very interesting. And then we have Friday with I think it's Digestion Friday actually after the morning. So that's going to be really good. And then we are going to talk about today. how we met all-time highs, how we knew today was going to be an all-time high, and then we're going to talk about some of the trade structures. We're going to try our best to go through all of it today. And yes, this will be recorded. I will post it on YouTube after. But that doesn't mean you should not participate, man, because it's better when you get in on this. So, Wednesday. So we have Thursday tomorrow. By the way, there is a chance I might not stream tomorrow. I do have dentists. We'll see if they can make me go in the afternoon, but at the moment it's in the morning. So continuing jobless claims, initial jobless claims. This is going to be very important for pre-market. For you futures traders, catching this move is going to be very, very significant. For us options and New York session traders, what can we do once this news drops? So I always say there's 3 things that I like to do when these news drops for pre-market. Mark the high. Oh my goodness. Mark the high and the low and the 50% of the news event. Right? So let's say it moves SPY to absurd levels. I'll actually just do it here. I'll show you what I normally do for pre-market. So this one right here, okay, for SPY. So this was the news, right? So we're going to mark the high. We're going to mark the middle. I'll just do it for you right now, actually. Mark the high. Mark the middle, 50%. Just eyeball it. And then mark the bottom. Right, so these levels should be important for us to stay above, and we just leave it there for the entire week, for all of next week. Right, again, I don't use TradingView that much, so I don't actually have it here, but I mark them on my actual brokerage. So these levels are going to be, they're going to help us. They're going to help us maybe determine what levels are going to be significant supports, especially if we move up. And the resistance, if it's the other way, right, if CPI or jobless brings us down, we're going to be focusing on them as resistance. So that's what we can do. And then we have one other event tomorrow that's going to be very interesting. U.S. President Trump speaks. Now, we know he's already doing a whole lot in the market, affecting it. Right, we saw solar tank. For those of you guys that put credit spreads on First Solar with me, yeah, they're kind of down right now. From what I saw, I'm down like 22%. First Solar decided to drop just another 4%. But I think the risk there is still okay, and so we should be staying away from this as much as we can. We don't know. He's a wild card, right? We can actually see. Before January, we talked about how long deltas, sorry, not before January, the last OPEX that we just had, so January, I think was 17th, right? We were talking about how it's very strange that all the long deltas have kind of dwindled from now all the way into March. Right, so what does that tell us? It tells us that even the funds and the firms and the big whales, they're even unsure. Right? Donald Trump is a wild card. We know he's signing over 200 executive orders. We don't know what all of them are. And if the whales are even, a little bit risk off, we should probably be focusing too. Not only that, we have been talking about this a little bit already on stream and other days, but Bank of Japan, whoever remembers yen carry trade from last year, I definitely do. I have PTSD from it. Bank of Japan raising rates potentially this Thursday, so that's in the outlook of the market as well, and it's going to be tough to kind of want to put on for these events. Personally, I think I can say I'm 80% cash, right? I just have too much PTSD from last time. And so I think my plan is to wait until all these events go through. So Donald Trump, let him do his spiel. Bank of Japan, let it do its thing. And then I'll participate after the fact. And that's perfectly okay, right? In terms of risk on, risk off behavior, I think that's what I want to do personally. I don't know about you guys, but I've shared as to why I'm doing that. Mainly it's PTSD. It is what it is. What can I do? So that's what we have. And then not only that, tomorrow is a news pack day as well because we have 10-year tips auction. So this is a 3-star. This is going to be a 2-star event. But we've seen this auction act as a 3-star event. So what is this? I'm going to post it for you guys here. Right, we know there's a lot of interest on the Treasury inflation protected securities. Today, the bond auction didn't do a whole lot, right? The 20-year bond auction is actually supposed to be something that affects the market, but today it didn't do it. And that's okay. Right, yeah, this is all PST because we know West Coast, best coast, right? We never reference East Coast because you guys suck. Right? So just add 3 hours for EST. Yeah, so tomorrow should be packed. Whether we put on risk or not, that's going to be up to you. I'll have to decide. I'm going to have to take a look at what levels are present for tomorrow. But tomorrow, so far, looks okay. Friday, we have S&P Global Composite PMI. This is going to be the 3-star event. And then right after this is what we call digestion. So digestion Friday is a term we use to kind of explain, Friday, all the news is done now, over and done with. Whatever happens to the market is just the market digesting everything that's happened and seeing if they want to risk on over the weekend or risk off over the weekend. If we start seeing a long deltas start to appear for next week, then we know, okay, they're back on. Or if there's short delta, then we know, okay, hey, they're actually betting bearish for next week. Right? Things like that. So right after this in the morning, this happens like 15 minutes in the morning, and existing home sales, that's going to be 30 minutes into it. The rest of the time is just going to be a whole lot of nothing. And I want to see actually what happens. So there's one thing that I'm wondering, right? This is just a guess right now. I have no factual data behind it. If Bank of Japan brings us down, do we get another opportunity that we had last time, right? So this is SPX. I'm going to turn off VWAP because VWAP doesn't exist, but this is around the last time that happened, right? So do we get an opportunity to buy the dip, right? That's what I'm going to be interested in. If Thursday, it is overnight. If something does happen, do we get a chance like this again, where we can sell ridiculously priced puts, right? I know someone on stream, maybe he's not here right now, but someone in the server telling us how crazy of a deal he got to sell 4,800 puts expiring this year sometime. Early, I think it's like Q1 too. So if we get silly trades like that, that's a lot of credit that we can collect to spend on our debits. So selling 4,800, that's ridiculous. And so that, seeing where we are now, that's a hell of a drop to even catch that. I would just let that expire. But I want to see what happens. After these events, do deltas come back? Is everyone back on, risk on? I don't know. We'll have to see. So that's the plan for Friday. Now, we're going to go over what happened today. So what happened today? Who knows what happened today? What a day it was. What a day it was. And following Gamma and Delta and Vanna and like this I can't say enough how much of a cheat code this stuff is. Once you firmly understand this as value for the market, you're just gonna be winners. It's just so who caught the longs today? Let me ask that. Give me a thumbs up in the chat if you caught longs. I definitely caught some longs. Nice, nice, nice. Not me, but the data was there. That's okay, Sim. We'll get it next time, David. I don't even need your thumbs up, man. I already know what a killer you are in the market. Yeah, so today was a great showcase of how you can just look at the data, right? What are the three things that we talk about when we trade? Right now, this is not quant data specific, but it's just trader mental specific, right? So three things. The job of a trader. Jobs of a trader, right? One, determine what is the most likely scenario for price based on what you see. Two, determine whether what you see is worthy of your participation. Right? Is it worth the risk? And then three, how do we participate? Right? So today we all knew from the open, we're already at MVC. Right? We're already at MVC, 60-80. Right? We talked about 60-75 like last week. But 60-80 was there. But just look at the amount of deltas. Right? So we understand deltas as, like long deltas as support. Right? If we lost this 60-80, that's a hell of a lot of damage for the market to take. So what is long deltas? Long calls, short puts, right? So that tells us the market wants to stay above. It wants to stay above this, 60-75, 60-80. And as we moved into London Power Hour, which is our optimal time to trade, what happened? Right, we started to move further away from this. And not only that, we started to see 60-75, 60-80 grow in value. Right? And long volatility down here. That's interesting. But 6100 was actually on the radar here. So let's see, 6730. And as we moved on, what did we see here? Let me show you on gamma side. Right, what do we see on the left? Bottom left. As we slide this timer forward, what is growing to give us a hint? Right? That's one of the things we want to do in the market. We're just looking for hints as to like what's happening. What is going to happen? What's the next move for the market? It was already telling us that there's interest here. 6100, right? Do we see that? So this was at 100 million. We go back to the morning here. We talk about contraction, right? When we talk about the MVC, what are the three scenarios that happen when we hit the MVC? Three scenarios. And this is actually explained in my YouTube videos. So one, we pivot. Two, we hold. Three, we go further. So what's happening in this scenario? We opened at MVC. We opened at the most valuable contract. Three, right? We were going further. And how do we know we're going to go further? When a new MVC in front of us is formed. Because this shows us the target. So that gave us the range for today, right? It gave us the range of like this terrible range of the bottom 60-75, because no way we're losing 60-75. This is a lot of, like if you can just imagine if the market did flush through 60-75, it would be quite a bit of destruction for the market for them to sell these, to sell their calls. And to close and to buy back the short puts. That's huge. Like this would actually flush. So we were making a bet that this was probably going to be a solid bottom, and so we sold 60-65, 60-60, a $5 credit spread. We closed them at 50%. Wasn't a lot, but nonetheless, the range wasn't that much today. But the moment we started seeing 6100, we saw, okay, this is probably going to grow and surpass. So we saw 138, you saw 156, and as we move the time forward, we're contracting in this MVC to show 6100, right? This is London Power Hour now. And then as we go further, eventually we see, look at that. Look at that. You guys see that? What happened here? The market was okay. Y'all want all-time highs? Like, okay, we'll give it to you. Right? Nonetheless, there wasn't a lot of room to work with, right? So directionally, I wouldn't have wanted to take it too much. We took MES longs for, I think it was like 8 points before we stopped out. Can't remember anymore. But the put credit spread was probably a better way to participate. But nonetheless, this actually showed us the range, right? We saw a 6100. So the range today was established based on this, right? Range was established today based on delta or dex and gex. Gex is your reference for targets. Dex is your reference for support, resistance. Why am I typing terribly today? Okay? I swear I don't have fat fingers. So, we saw this, right? So, this is a very tight range. So, Gex was saying 6100. Dex was saying support at 6075. That's 25 points. And what happened today? What happened today? So there were actually two scenarios today that happened. We met MVC, right? We saw MVC early on, and then we went further, and then we contracted right here at like 910. So I'll show you what 910 looks like. So 910, 6100, we met it, and what happened? Three scenarios, right? We pivoted when we hit the new MVC. Right? So this is how we can accurately predict the scenarios for price based on the data, right? And then this also gives you more of a clue too. Look at the convergence here. Like what started to happen on 0DT calls and puts as soon as we hit 6100. Puts. 0DT puts started to surpass calls. Calls started to stay flat. No one was betting on calls anymore. Everyone was buying puts. Right? So with these tools, you can accurately predict like what's likely going to happen. So when puts start surpassing and we've already hit MVC, we can already kind of guess. We can already gauge that, yeah, we're probably going to do a pivot scenario now. We've hit the top of the MVC. 6100, that's all the market wanted. It didn't want any further. I know it's a crummy 25-point move, really, but nonetheless, that's how we do it, right? So we were comfortable with our positions selling outside of interest, right? So we're selling below the support of 60.75, and we're targeting 6100. Now, I did say that there was one more trade that I wanted today. I just didn't get it. When we hit 6100, I said I was willing to sell 6120 and buying 6125 as protection. So another $5 spread. There was just no value when I saw it. It was going to give me like $20 for a $500 worth of risk. That's not within my range. I need to collect at least 10%. So if it doesn't at least give me $50 for a five wide, I'm not going to do it. That's a lot of risk to incur. It's also unrollable. If you don't collect at least 10%, you won't be able to roll that position. It'll take you like more than 2 rolls to win. Call credit spread. Yeah, that's right, sorry. So I wanted to sell a top if we got to a top. And we did. We did get to a top. I just didn't see any value in selling 6120. Right, so everyone understands, like today, that's how we traded. We used the data to determine the highs and the lows. And what a day it was. What a day it was. It was a really good day. And I think the more we focus on the data, the more we focus on patience and making good trades, we're going to grow. The more we're going to make the market pay our bills. Right? That's our goal for everyone, right? Hopefully. Trying to pay my wife's bills, man. Dude, I don't spend a dollar. Pay for Raising Cane's. So yeah, so far everyone's understanding, right? Today was an easy day. You know, I am technically on a little bit of a win streak, so I'm being very wary. Like I don't know. I don't know. Yeah, I don't know when it's gonna change for me. Yeah, call credit spread when we're topping. Yeah, so that was my plan for today when we hit 6100. Again, we just didn't see the value though. I wanted to sell 20 points ahead of it just in case. But it was only going to give me 20 bucks for the risk, and so it wasn't worth my time. But yeah, David, 100%. That's what I wanted to do. It didn't seem like we were going to go further. We did see 6110 potentially, but as soon as we hit 6100, it just went kaput. Like we didn't want to go any further, right? You guys see it right here. 6100 was definitely the top. But by 10:30, like it's already too late. There's no value in selling 6120. I also didn't expect us to come back down to 6085, but I've already left for the day, right? Our job as traders to, get what we can and leave. Don't stick around to throw your money back into the market. Right? In terms of value, what's that no value here? Yeah, so I operate my credit spreads. For buy side, it's going to be a little different, but my credit spreads, I have this ratio. Profit to margin ratio of 10%. Minimum, right? Obviously, the more the better. But for myself, what I found is if you don't collect at least 10%, rolling is really hard to do. So in this example, I'll say like for every 1,000 of margin that you're putting up for risk, I need to collect at least $100. So today we sold SPX 6065, 6060 for 50 bucks. But we put up 500 of margin as max loss potential. Does that make sense? Obviously, again, the more the better, the better. But sometimes you just don't get that. But this is my absolute minimum. Absolute minimum, and we operated that today. We got the absolute minimum. We got the 0.5, and then yeah, that was it. That was a good trade. I know a lot of you guys were very happy with that. I was very happy with it. Green is green. Right, David, give me a thumbs up if you understand. If you don't, I can definitely go further with you next time. But today, I mean, that's the recap for today. Today was a good day. So now we're looking forward. Like, what does the Greeks look like for tomorrow? Are we cooked? So I'll tell you, interestingly, tomorrow, I'll show you what tomorrow kind of looks like here. No, that's not a good view. But tomorrow, we are looking at interesting value here at 6105 and 6110. Now, I am going to message the devs to see if that's a mistake or like if some sort of data feed is incorrect because it says 0 here. Right, but 6115 right now is looking like there might be something there. Look at the amount of long deltas too. Now I know if we go backwards, 59.95 has a long delta. Sorry, 59.50. But that's so far that we can ignore that. But if we start seeing these deltas climb up towards 1 billion, we will now have new levels to operate in. And it takes us further into all-time highs. A little bit further into all-time highs. And we're going to potentially move up. But I'm just still a little worried about Bank of Japan. I know you futures traders are going to have a great time, but I might just be suffering. I don't know. Yeah, and then looking into Friday, we still have that exposure forward. So 6,100 as the top. So it's almost like a top call. Like we're already there. So what range do we have to work with? We'll have to wait for these exposures to change. If we start zooming out to, again, further out, we don't actually see anything until March. So everything is pretty quiet until March. And I suspect after this week, after Trump does all his stuff, like maybe we'll see interest for deltas to come back, and we'll see the market kind of confidently show us whether they're long or short. Right? So that's it. Yeah. Be very protective of your capital. That's my suggestion. I'm not a financial advisor, but you can do whatever you want to do. Personally, I am. I'm very much risk off right now. And that's okay, right? I want to stress this because some people have been asking, "Oh, William, why are you not doing like what you normally do and just have things on?" Cash is a position, right? I want to stress to you guys that as a retail trader, that is a position that you can have. We don't have obligations to be cash on, right? I'll speak to it in this way. Sometimes like whales take positions that they have to take, and allocated traders, right? Let's say like guys that work at the funds and stuff. They have to be allocated. And so they have to take these positions that they feel 3 out of 5 about. Just because they need to use the money. Imagine you invested your millions of dollars into a firm and they told you that they were cash. You'd be like, what the hell? I could hold cash myself too, right? So they have allocation rules. And so they need to use that money. But for us, we're only obligated to ourselves. And if you're ever in a position where you're just unsure, it's okay. Don't let anyone talk you into putting on positions. We're here to pay ourselves. We're here to survive the market and stay for a long time. So that's my little bit of ABJ wisdom. Like I sometimes I see you guys itching, like, price is doing this. Like, should I get a call? Should I buy a put? Like, what should I do? You should do what you're comfortable with. First of all, don't listen to anyone else. And then. Yeah, see, like the words sometimes, right? Midnight here saying, I let someone talk me out of a position today. Yeah, it sucks. Because you were willing to put on the risk, right? And then you let someone else get in your head. It's tough. So just remember that, guys. It is perfectly okay to sit on the sidelines and wait for your A+ setup. Right? I just ran a class earlier for a small group, and we were talking about your trade structures, right? And what you want to do. Getting away from FOMO and things like that. Just, it's a tough one. And working through that mental. I will post the recordings later on YouTube and you guys can watch it for yourselves. But yeah, FOMO is very, very, very dangerous. If you start FOMOing into positions, that's actually one of the worst things you could do. Because it could be very destructive. Okay, let's see. I did promise to leave more time for questions. So for those of you guys with questions that I can answer quickly on the fly, I'm happy to do so. Brian's asking, do you options trade? Yes, I trade options. I trade stocks. I trade leverage stocks. A lot of leverage stocks. Then yeah, options. A lot of options. Actually, I was going to showcase, I forgot. I took a picture earlier, but these are for leverage shares. I know some of you guys are asking which leverage shares I trade. So how do I snip this? Windows key Shift S. Windows key Shift S. Oh, where'd it go? So these are the leverage shares that I like to trade, and I follow their newsletters to see what other things they have released into the market for shares. They're great. There you go. Let's see. Other questions. What are your parameters when considering rolling? For 0 days, first of all, I will say, David, 0 days rolling is actually very hard. It's sometimes you have to bite the bullet and roll to ridiculous dates just to save yourself. Now you can do it. I do it all the time. It's almost me saying that I give up, and I just want my money back. But I roll down and out, and I just try to make sure that I'm collecting at least more credit than I'm about to. Like you want to just collect more credit than you've spent. But there is a really, really, really great study on how to roll by Tasty Trade. I'm not going to remake their work. I generally follow that. For the 21 days out, like the 45 day out ones, that's a lot easier to roll. Another parameter is if I am being tested during power hour, and if gamma has shifted. If the new MVC is now below my sold strike, I'm gonna roll right away. The sooner the better. And I'll usually have to roll like 30 days out for the 0 days just to save myself. So down and out. You want to roll if you sold a 6,000 put credit spread. You want to you want to roll to 30 days out. Let's say 59.90 and see if you collect the same credit or more. You have to try to collect more. Do you mind helping me understand QuantData more? That's my job to do that for everyone. We have a YouTube channel. We have a lot of information there. And I think the more you participate in the live streams and these Q&As, you'll be able to learn a lot just by sitting in and participating. Tesla looked good going into this week. What are your thoughts for tomorrow and Friday? So let's take a look at Tesla. I know our predictions on NVIDIA were winners, right? For anyone who caught NVIDIA, first of all, I hate you. But second of all, congratulations, right? On the Monday Q&A, we said that NVIDIA was primed for above 146, and today we are now at 147. So those contracts have actually gone, I just checked, 170% since we called it out on Monday. Yeah, so Monday Q&A. Yeah, so it's been a time. So Friday on Tesla, looking dicey. I mean, it's not good that the exposures have rolled down. You can now see short 437. Exposures for upside of 430 are here. We did see 450 and 440 before. It's not good that we see it lower. It's because people have given up on their long positions then, right? This stuff is dynamic. It changes all the time. If we start looking for if we start looking for next week, again, I'm risk off until after this week. I'm just not sure. You can kind of see, okay, yeah, there's a little bit more exposures. If we lose 410, which is we're really inching close to it, it should be a flush. Why 410 is because next week, this is the last line of defense for deltas. Does that make sense? So far, let me see if you have... Chat's going crazy. Oh, I'm having mic issues? Oh, I'm sorry about that. Test, hello. Cool. Okay. So Tesla, if we lose 410 next week, the line of support is going to flush. So 410 right here is the last line of long deltas. Right. I wouldn't even consider this because this is 40 million in long deltas. So for 400 is not a lot of money. But I can say that 87 million is going to be a lot more. So what happens when we lose 410? For next week's exposures, they're going to have to sell these as for a while. They're gonna have to sell these, and that's going to be a lot of pressure for downside. I still think there's 4 stocks that I know things are changing right now, but I still think 4 stocks in 2024 that I refuse to short: Tesla, Apple, Nvidia, PLTR. In 2025, I still think these 3: Tesla, Nvidia, PLTR. I'm willing to start giving up on my namesake Apple at the moment. Things aren't looking too hot for it. So this is next week. You guys probably didn't hear me for this week. So this week is already kind of shot. If you look here on the gamma and delta side, people have kind of given up on 440 and 450. And that's not good. The fact that they've given it up means that there's no more moonshot scenario. It's gonna be tough. I'm still risk off though. I'm still generally risk off until further notice. Let's see. Scrolling back here in the chat. Would you say options trading is good for someone who has been trading a year daily? I can't speak on that. I think options is for some people, and some people it's like not for them. I think, Brian, you're gonna need to determine what your goal is in the market. Sometimes I actually question why some people need the leverage of options. Right? Leverage is a high risk, high reward kind of trade. I know credit is risk defined, but most people don't trade options that way. Most retail traders don't trade options that way. And so I would just really question yourself and see if you need the exposure of options. Thanks for on the rolling question. That was a great insight. Also, in terms of potholes and considering trading directions, what's a couple things you'd be looking at on QD? Delta, mainly for support, right? Because I need to know support. Because number one of my trading scenarios is to sell credit. Right, so you can ignore this. Well, you could use it for today too. But range established today, DEX and GEX. We're mainly using this. So I'm mainly focusing on these two. I know Vanna eventually becomes not as important later on in the day. So I am mainly looking at DEX and GEX. Right? We know that as soon as London Power Hour starts, which is 1 hour into the market, Vanna kind of already loses some of its interest because volatility is no longer at its peak. So I'm using GEX for targets for price, and then I'm using DEX for support and resistance. I'm using DEX to determine where I want to sell outside of, mainly, unless we get a pivot on MVC. And I'm using GEX to determine where price is likely going to gravitate towards. Right, David, hope that helps. Whenever I see potholes in price, like I'll show you what Apple looked like. This is why I said Apple was untradeable. I know Apple has still been kind of flushing, but Apple was untradeable to me at this time. If I go back to Jan 21st. Actually, let's go back to the 17th. What does Apple look like here on Delta side? Terrible, right? It looks like there's long and shorts everywhere. And so that's why I said when we were doing our pre-market or our weekly prep for trading on the Monday, I said, like, this is not a scenario that I would want to participate in. I don't know if it's going to go up. I don't know if it's going to go down. All I see is a mess. So to go further with answering your questions there, David, I think one of the main things you should understand as a trader, understand about yourself. Main things you need to understand for yourself is what kind of trader are you? Now, I know ABJ is not a scalper. If you're a scalper, like, by all means. I personally tell myself, like, if I'm not interested in a position, holding it for longer than 15 minutes, I'm not interested in the position at all. That's a lot of risk for me to incur. I think you guys have seen me on stream, like, 1 to 3 trades max per day. I think I always ask myself this question, right? And I don't know. I don't think scalpers ask themselves this question. And I just haven't seen that many, like, super successful scalpers, right? The question that I ask myself before I take a trade is, if I were to only take one trade today, is this it? Is the one I'm seeing in front of me going to pay my bills? Right? And so when you start asking yourself these questions, you'll start to deviate away from trade scenarios that look like this. Right? Like this is not an opportunity for me to go, like, I mean, if I see this, if I was a scalper, I'd be like, oh yeah, this is great to trade ranges, you know, up and down, couple points, maybe on future side or something like that. I wouldn't scalp on options. I think scalping on options is a loser sum game. You could do it with shares, you know, if you trade AAPU, that's the leveraged share of Apple. But even then, is it worth the commission? Is it worth the time? I don't know. It's going to be a question for you. But for me, it's no. When I see it like this, when it's not smooth, when I don't get a trade where I'm really confident in direction, I would just rather not. Does that make sense for you so far, David? That's just me, though. Again, I really want to stress that's just me. I know other people in the server scalp. I know other people in the server take trades that are like 30 seconds long. That's just not me. I've never found success that way, and I want to make sure that I pay myself. Yeah. Let's see here. Audio might be good. Tell me Discord. Thank you. Yeah, sorry about that audio. I'm pretty sure it was Discord, but if it wasn't, I can blame my wife. You know, last time she like knocked over the power bar for our router, and then blamed me because she said, "Why do you put the router here?" And I said, "I'm sorry." That's all I can say, right? That's usually how men behave. You just apologize immediately. Sorry. Is my credit spread strategy based on gamma play or more of a theta play? My credit spread strategy, I kind of treat it this way. So I do something very different. I don't calculate deltas. I just look to aim outside of where the interest of the market is. Right? So if you kind of look at credit spreads as like, so in the market, right? If you think about the market this way, okay? If you're aiming at a target, right? If you are aiming at a target, what's easier? To hit the target or to miss on purpose? It's to miss on purpose, right? You have so many more opportunities to sell all these nonsense strikes into the market there's no interest for these strikes. But we can collect the money. We can collect the credit on that. When you're aiming at a target, it's like, okay, I want, like, for example, NVIDIA. NVIDIA is trading at 136. We saw that by Friday, there's a potential to get to 146. That's you aiming at 146. But inversely, we can make these trades where we sell puts down for like 110. You know, there's no interest for 110. We see a bullish scenario. That's a maybe, right? It could even not go there, right? We saw Tesla. It said 440, 450 potential for this Friday. Now it's not. But what we could have done is, you know, we could protect ourselves and collect credit and sell puts like way further down, for example, and just not focus on trying to hit the target. Right? That's why I kind of talk about the 80-20 rule, where I structure my portfolio to only 80%. Oh, sorry, 80% of my portfolio is dedicated to collecting credit, making these probabilistic trades, and only 20% of it is dedicated towards excuse me, dedicated towards debiting, long calls, long puts, and leveraged shares. And so in that way, I'm making sure that I collect enough credit so that I can spend. Right? Even if you're super bullish on a stock, before I even put calls on, I'm already selling puts to make sure I can afford those calls. Or inversely, if you're super bearish, I would start selling calls, and then even before I start buying puts. Yeah, good stuff. Good stuff here. What are you looking for when looking at Vanna and Charm, that you don't get from looking at Delta and Gamma? Well, Circa, I would say there's a really great educational kind of video series from Tasty Trade. I'm not going to remake their work because they have already done really great work. Options Crash Course 101, they talk about Vanna and Charm specifically. Vanna is the direct Greek for Vega, right? Volatility. And Charm is Delta Decay. So Charm, I would say mostly sell side is useful in terms of utilizing QuantData. I've been using Charm to do like the 45-day out trades to see which contracts are worthy of higher decay. When you start moving it into sub 45s or even sub 30s, it actually looks very similar to Vanna, and that's because it eventually turns into volatility, right? If you remove Charm together, though, while using QuantData, you could still find success. Charm was just added in V3. Now that we have it, it's a great metric to use for credit spreads. But for everything else, I haven't found use for it yet. Delta and Gamma are still primary, right? So when we talk about the importance, I can show you right here that I drew this. And this is based on our studies right here. Now, there's no Charm, but this is why Vanna is also not as important in the eyes of my strategies. Because for 0 days anyways, and if you do it on a longer time frame, it'll be the same thing, just stretch the time out. At some point, Vanna just collapses in importance, and Gamma weighs more. So Gamma becomes a primary magnet for price later on as time comes down closer, and then Vanna is further out. So in this scenario, this is 0 DTEs, but Vanna is actually the metric that holds more weight, that holds more magnetization power during the open session, because we know volatility is at its peak. But eventually volatility contracts. It comes down to nothing as time goes on. And so by the last session, which is 11 a.m. my time, the last 2 hours of the day, you'll see that Vanna holds almost no weight. Like it starts to contract. It starts to really dwindle in value. And Gamma can actually go to infinite because contracts can become in the money. Right? So yeah, that's kind of how I do it personally. Let me clear this stuff up. Yeah, I'm excited for the rest of the week. I kind of want this week to be over, personally. I want the Bank of Japan to do its mess, and then I want Trump to sign his damn orders, and then let's see who's back in the market, long or short. I want to see. Definitely interested. But yeah, good session, guys. Thanks for all the questions. Obviously, if there's anything that I've missed, feel free to ping me. Feel free to ask me in the server. I've actually made it a habit now, just because the server has been growing and we've been putting a lot of YouTube videos out. I'm going to try my best not to answer DMs unless it's someone that I know. Only on Sundays I'll start opening them. So I did that last year. It really helped my mental, because otherwise I'll never leave. I'll never leave my phone. My wife will complain. Oh, you're not paying attention to me. We've all heard this nonsense before, right? Us married folk. Yeah, just better for my mental health to only answer DMs on Sunday. So if you need me, like ping me in the server. I check every night. And then for those of you guys that enjoy what we do, testimonials, like we really are looking for more so that we can put more, get more people on our work, get more eyes on our work. And yeah, help us out with our commenting and liking our YouTube stuff. Otherwise, I'm going to stop posting things. Otherwise, I stop showing up to work, right? No testimonials, no likes and stuff on my YouTube. I'm just going to not show up. And y'all just fend for yourself. No more call-outs. Secondly, we are now officially 2 weeks, just about. Sorry, 1.5 weeks. 1.5 weeks into our fitness challenge. So it's by participation. So if the more you put in some, some things, share some notes, share what you're doing, challenge each other in the fitness channel, the more you get brownie points, and then I'll tally them up. And then by Valentine's Day, we'll announce who's actually winning some merch, who's actually winning stuff from us. At the moment, I am in the lead. Just me. I'm in the running for all the prizes. So if you don't want me to win everything, throw some stuff in there. Let us know what you're doing. Healthy mind, healthy body. Sorry, healthy body, healthy mind. This is the other way around. I don't know. I think some of you guys saw some of the things we're giving out. I don't know. Curling grocery bags? Yeah, right, dude. Yeah, right. Prove it. That's what I gotta say. All right. I'm gonna shut this down. Again, the recording will go up on YouTube probably tonight. And I will catch you guys tomorrow in the markets. Might not be there for a long time. I do have dentist in the morning. Unless, again, they call me. But I don't think they're going to call me now. It's already 6. And for those of you guys that are new, welcome. Feel free to enjoy your stay here in Quant. Bye, everyone.